Hello everyone, welcome to the ninth episode of Breakfast with Jorge. I know it has been quite some time we haven't met, but here we are with our speaker, Mr. Jorge, with the aluminium prices and the other metal prices. So, good morning, Jorge, how are you?
Hi, Prarana. Good morning to me. Good evening to you. It's the beginning of April, and as usual, having my mate, M-A-T-E, with some warm water, and then the herbs in here, and that's it.
So, the world is being shaped by the conflict of Middle East, terrible, but let's first focus on oil prices.
Wow, we didn't meet for a number of weeks, and we have a war in between, an invasion, the way you want to call it. So you start asking me of oil prices. Oil prices today, April the 2nd, are above $110. Whether it's Brent or whether it's WTI, the price is huge. And having said so, based on the fact that we always speak of cash prices and futures prices, when you see how the markets are valuating the futures prices, just to give you an idea, on the oil, in the futures price, the next month after May, the prices starts to decline. To the extent, just to give you an idea, how much is doing the future price for December of this year, it's around $72, $74, which is a lot, it's almost 40% under today's prices, which in a way they are trying to reflect that the conflict is going to finish shortly, I mean after May or June. But this is what the markets are showing in terms of prices. And remember, the markets are the reflection of the human beings acting, buying and selling. And mainly that's it on oil.
Okay, so another concern is aluminium prices.
Yeah, it's of course on Ali, which is mainly our key focus. And on Ali, prices have gone over 3,500. Today the price is around 3,470, but that is the 3 months price. The nearby prices are over $3,500. Yeah, and just we spoke of the long-term price curve. So if we refer to the alley, look at this. The price goes down, is lower. That is a backwardation. Yeah. And the backwardation is not that much in the short run, and it's huge on the long run. Just to give you an idea, it is December of this year. The price is $130 under. But the price for December 27, it is under 3,000. It's 500 or more under today's price. I mean the price for December 2027. And of course, if you see the area of production, it's not that much what Iran is producing, that perhaps they might stop producing very shortly if they didn't have stopped yet. It is 500,000 tons around, and all the area which may be in problems due to the logistics, the movement and the conflict itself represent 10% of the world consumption. You know? And this is really huge, really very, very significant.
How far the aluminium prices can go?
How price, I mean, gas, it's a gas, it can go to 4,000. It can go to 4,000, which again, when you see the stocks, when you see the production and consumption, obviously, if 10% of the production is in problem, the consumption is going to go lower and the prices are going to go higher. No doubt on that. And yeah, the price can go up to 4,000 indeed. And in my view, the conflict will stay much longer than the media is telling, you know, because regardless the fact that Trump's mission, the U.S. mission on the region, is complied, you have still the conflict inside, and the real change will come or would come by a replacement of the regime. And for replacement of regime, you need troops to land there. And I really doubt the USA will put some troops there. Perhaps they're gonna destroy the key areas, the energy, and on top of that, when we speak of 4,000, we shouldn't forget the aluminum is packed energy, packed electricity, you know, and the overall cost is impacting in many countries. So that is the justification of higher prices, because if the prices don't go up, maybe 20% of the ali producers will need to shut, and this is going to be even worse. I mean, so coming back, I think that the conflict might stay much longer than expected, and that's it.
Okay, so what about replacing part of the aluminium?
Well, you know, you remember I've been in Jaipur in January, delivering a conference about risk management and hedge, and I was really surprised by the booming of the Indian economy, by the strong demand on, and the answer to your question would be the scrap trading, the recycling. Recycling, it's gonna boom. In my view, it's gonna boom. And perhaps the parity of recycled aluminum in terms of a percentage, because remember, it's not 100% of the pure metal, will go much higher. This is a strong possibility.
Okay, what about the copper prices?
Well, on copper, we have seen a decline. I mean, the copper hit over 14,000 for a while, and and then the prices went down. And they even were under 12,000 now. They are around to 12,500. So, in terms of the market pricing copper, it is mainly related to because let's go one step backwards. Who is feeding the market? Who are trading the markets? The markets are being traded by the speculators, the funds, the consumers, and the producers. That's it. But the funds, they do trade over 90% of the volume everywhere, every commodity. So having said so, even though the funds are extremely liquid, the liquidity is limited, Everything has a limit, and the more they go into volume on the oil, and you have seen also the strong volatility, never ever seen on, just to give you an idea, on the volatility level, which is a percentage, a normal, a standard, and historical, I don't know what normal is, but the standard volatility in oil was around 20%. Now it's over 100%. And on gold, the volatility 12%, 13% is over 40%. On the metals, around 30%, a little bit less anyway. Around, it's huge volatility, and the volatility is part of the game of the investors going in, out, extending their longs, sometimes increasing their shorts, depending who's doing what, margin calls and everything. So the liquidity has mostly gone to silver, gold, aluminum, of course, and much the less on copper, and that explains mostly.
So what are the lessons that we can learn?
Well, the lessons, so many lessons, so hard. You know, if you're a consumer and you have to pay for the frames for your building, a price based on 4,000 or 3,500 on the alley, and you didn't hedge, you are in trouble. Nevertheless, there is still an opportunity to hedge for the consumers because the long-term prices are lower. Remember, as I said, the prices for 2027 are under $3,000. So it's a possibility for the consumers. For the producers, of course, short-term, they might hedge and not to lose the opportunity to have such a high price. I mean, for example, companies in India like Nalco have, I don't know what's the risk management policy there, but they have a huge opportunity there. Not only them, every producer has the opportunity, while every consumer has to take care, because otherwise the market will not resist the transfer of the higher cost to the ended product, and the market will retrace, you know? And for the traders, of course, hedge is a must, and for the recyclers, if you have a fixed price of purchase, perhaps you feel relaxed because you feel their price are going to keep going higher and higher. But you cannot always match the pricing of the purchase with the pricing of the sale. So, as I say in my book, to hedge or not to hedge, that is the question, which, by the way, it's available in Amazon. I would say hedging becomes like a must. Otherwise, it's a roulette. Yeah?
So thank you so much. Thank you, Jorge. Thank you all.
Okay, thank you so much to you too. And see you next time in this beautiful space, which is Breakfast with Jorge, which is Breakfast with me. See you.
Thank you so much. So hereby we end the 9th episode of Breakfast with Jorge. Stay tuned with us for the next episode. Till then, drop your comments about the metal prices and the metal market in the comment section below. Thank you.